So hello class, it's me again, your teacher in your essential accounting. So let's have another topic for today, which is, let's go back to your SAP business one. Okay, so we already finished the subsidiary ledger. So need to proceed with accounting cycle using the SAP. So we know that we have prepared the accounting cycle using only through the lecture, and we already did that. How do we apply the accounting cycle using the SAP Business One solution? So it's an application class from the lecture here in the laboratory. So steps should be journal. Accounting cycle of the system will include the journal. There will be journalizing that will include general journal. Under the general journal, we will have special journals, sales journals, purchases journal, cash or check receipts journal, or cash or check receipts, cash or check disbursement. Then after under business one class, you need to go financials, then for journal entry. Then you have to, if it's a sales journal, then it's a sales AR. If it's a purchases journal, it's purchasing AP. Why you notice that there's an AR there? AR is accounts receivable, by the way. That means that when you have a sale, it is assumed that it's a receivable. And purchasing is AP because you purchase through accounts payable. Accounts payable class, when it's a liability, it has normally 30 days credit terms. It depends on your supplier. Now, there's what you call cash or check receipts when there's an incoming banking incoming fund. Okay, so cash or check disbursement is banking outgoing fund. Right. Number two will be the ledger. The ledger will have a general ledger, and when you want to go to general ledger, it has to go with the financials. You have to click financials, click financial reports, then click accounting, click general ledger. Then under subsidiary ledger, you will have to click financials, financial reports, accounting, then GL accounts and business partners. Now, if you want to go for stock cards, like if you're the merchandising business, you have inventories, then you have to go to inventory, inventory reports, inventory posting, right? All right, so I hope it's clear, class. So now if you want to check the items in the inventory, you can check inventory, then item master data. Now, if you want to check your business partners under the subsidiary ledger, you can go to business partner, then business partner master data. Then we'll have trial balance. I already explained to you what is a trial balance. It's a list of all the accounts, the debits and credits of your business, of the business. If you want to see that, then you will have financials. You have to click financials, financial report, then financial, then trial balance. Then you can see. Then we have adjusting entries. Then again, you have to click financial, journal entry. Then you click the adjustment box. Okay, so what is it? What is it about the accounting cycle? We already discussed this one in your lecture. It includes journalizing and what else? Right? There's a lot to include in the accounting cycle actually. See, yeah, which is that is actually the core of this laboratory, so that you'll be able to apply your knowledge in the lecture in SAP. Okay, so after journalizing, then you can it's too far na sab. All right, asa naman siya. Okay, so what is journalizing, class? We are here. You have to have to do the journalizing and then do the posting in the ledger, and then when you have the trial balance from that ledger, then you can post your adjusting entries for the accruals and the deferrals, remember? Okay, now journalizing in accounting and bookkeeping. A journal is a record of financial transactions in order by date. A journal is often defined as the book of original entry. The definition was more appropriate when the transactions were written in a journal prior to manually posting them to the accounts in the general ledger or subsidiary ledger. Manual systems class usually had a variety of journals such as sales journal, purchases journal, cash receipts journal, cash disbursement journal, and a general journal. But with today's computerized bookkeeping and accounting, it is likely to find only a general journal in which adjusting entries and unique financial transactions are entered. The recording and posting of most transactions will occur automatically when sales and vendor invoice information is entered. Checks are written, and in other words, accounting software has eliminated the need to first record routine transactions into a journal. So, what are the special journals? We have sales journal, cash receipts journal, purchases journal, cash disbursement journal. Sales journal class is a special or specialized journal used to record sales of merchandise. As the word sales journal, then of course the records of sales of merchandise to customers. In manual system, it is sales journal. This saves a significant amount of recording time because in today's computerized environment, sales are recorded automatically when the sales invoice is generated. So another journal is cash receipts journal, a special journal or specialized journal used to record money receipt. In a manual system, this will allow one entry to the cash account because it's cash for the month or shorter period instead of debiting the cash account for every receipt. Okay, so then another journal will be the purchases journal. A purchases journal is a record of all acquisitions made and a credit during a period. In other words, this is a journal that keeps track of the other orders placed using vendor credit or accounts payable, as well as the current balance owed to each vendor. Cash disbursements journal. A cash disbursement is a journal, is a record kept by accountants as to record all the financial expenditures made by a company. So cash disbursement journals serve a number of functions. So such as a source for recording tax write-offs and a categorization of other expenses. This journal essentially functions as a checkbook ledger for all practical purposes. So what is now then a general journal? Now, a general journal class is a master journal that all company transactions or journal entries are recorded in. A typical general journal has at least